Welcome, everybody. I want to thank you again for being here on time, for being here early, if you are here live. What we're going to do today is go over the 7 major mistakes that cause most traders to lose money in this business. Quite frankly, through my experience now coaching traders from all over the world over the last 6 years, I think it's safe to say I've seen every mistake that you can probably make in the book. And I've kind of grouped them together today under these 7 sins so that it's really easy for you to reference back to them while you're trading live. That way you can hopefully change direction, change action in that live moment and avoid these mistakes going forward in your own trading. So as we go through here, do me a favor, no Facebook, no trading terminals, everything shut off, full focus here, and take some notes. Even if you only write down the 7 sins and that's all you write down, just keep that on your desk for the next 2 weeks of trading and see if it makes a difference. That's my goal with this webinar tonight. So as we move through the content tonight, it's very straightforward. You guys know how I roll. We're going to move through just a quick intro to me and ASFX. I'm going to go over these 7 mistakes that cause, like I said, 90% of people to lose money in this business. We're going to do a Q&A. Please hold your questions. If you're here live, hold them till the end. Put them in the chat. I'll go back and read through, but just don't expect me to answer as we're going through. Let me crush my presentation, and then we'll do questions. And then, of course, for those of you that are brand new to me and ASFX, I've got a really great offer for you to join the team today. About 75% of the people that signed up for this webinar have not been through our beginner and advanced course. So if you haven't, stay tuned to the end. I've got a special offer for you. And I always like to tell you guys that up front, that I am going to offer something at the end, because I think a lot of people try to run webinars and sneak it in on you. And I'm not about that at all. I would rather know, if I was in your position, what am I getting into at the end? What's he going to try to sell me? At least I'm upfront and honest about it. And then you guys can feel like, all right, if he's telling me off the jump that he's going to offer me something, I should at least maybe trust him of what he's going to offer me. So if you're new, if you're just getting into ASFX, just getting into trading, you're going to like what I've got for you. But if everybody's ready, if everybody here is live, is interested, is ready to get through this, hit the yes in the chat and we're going to get started. So why I got into trading is something I feel like I always want to share when we start these webinars. For those of you that don't know, I started my career in finance working for Northwestern Mutual, working for Mass Mutual. Those 2 finance companies gave me a really great understanding of life insurance, investments, and diversification as you gain wealth. Really, diversification as a way to build wealth. But to be frank, I wasn't selling any life insurance when I was 19, just getting into this business. So it, had me on my hunger, on my motivation, trying to find a new way to make money. And that's when I fell into day trading. That quickly snowballed into me getting a job for a prop firm on Wall Street. And I worked there for about 1.5 years, a little bit over a year. And I learned a lot working with them as well. I learned about the magnitude of the trading industry and how many people really trade stocks and options, but we're just not trading Forex. So I saw just a huge opportunity to start to share the Forex market with people, because I think it intimidated them. So I was motivated by my own results. I was motivated by the entrepreneur in me saying, look, people don't know about this. I can share this. And that's kind of what built up my following and built up the brand. We officially launched ASFX, me and Riley, in July of 2019. And like I said, we've never looked back. So for me, trading has always been something that came first, before sharing the education, before sharing it with other people. I've only been sharing the education as people at first just were asking me what I was doing to make money. And now, of course, it's grown into this brand where people trust ASFX and people come to ASFX to start their trading journey on the right foot. And I'm very grateful for that. But it's been a process. It's been a lot of hard work. And the reason I feel confident to share this webinar with you guys tonight is because I've been through every single mistake that I'm going to share with you tonight. I've made it probably multiple times, probably in bigger ways than some of you guys can imagine. So because I've made the mistakes, and I like to think I've come out on the other side from most of them, that's why I do feel confident to speak on it with you tonight. These are just some of the pictures from my trading journey so far. It kind of goes left to right. This picture in the top left corner here, this is a picture, one of the first pictures I ever posted about me trading. This is in 2016. It goes from there. This was what my desk setup looked like when I was working for the firm on Wall Street. I've had the opportunity to meet really amazing traders like Dr. Steenbarger. And then from there, we've progressed. Now we're running our own seminars. This was our first seminar in 2019. Towards then, you can see here, this was our Clearwater event earlier this year. We did an Arizona event back in March, Miami down here, and then we had our St. Pete, Tampa event right here. So we've done 4 live seminars over the last year. Very grateful. Even during COVID, people coming out, not only hungry and motivated, but people wanting to be out there more than I even expected, because I think the COVID lockdown had us all cooped up. So once I had the opportunity to set this up and bring traders together in a learning and in a fun, friendly environment, people have just been chomping at the bit, to the point where we're sold out for our retreat at the end of the year coming up in December. And again, I'm just very grateful for that. And I don't share that to brag or anything. I just want you guys to see we're working with real people, getting them making real money. That's the goal here. And again, with today's presentation, we're not so much focused on the entry signals that you should take. I'm not going to be sharing anything like that tonight. I've got plenty of other content for free that you guys can figure that out. Tonight, we're focusing on the other side of the equation, cutting out the losses. And really, that's inspired from me working with other coaches and working with other traders for such a long period of time, seeing that a lot of traders don't really need to add wins to their strategy. A lot of traders already have really good systems, really good strategies, but they're taking too many losses. So today, these 7 sins are going to help us cut out the losses completely. Now, the first sin of the 7, as you can see, is that most traders that struggle lack a proper routine. Now, what I mean by that, and of course, the first picture I'm going to show you is me at 6 in the morning at my desk. I post that every day for a reason. I want you guys to see that I am as consistent as I tell you to be. Now, I will be perfectly honest with you. Consistency in trading is an illusion. It really is. And I want you to really pay attention here, because this is an idea you're not going to hear anywhere else. To me, as we come into trading, people want consistent results. But to me, I would almost call it impossible, because that would say that we know the outcomes of every trade. Now, you could be consistent in your results over the course of a year if you're profitable, of course. But on a day-to-day basis, especially new traders, they want to come in and they want to see win, 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 no losses. And that is, in my opinion, impossible. I've never seen a trader never take losses, right? So instead, to focus on that word consistency, let's apply it to our routine, to the things that we can control. That is the difference maker when it comes to building a solid routine that you can actually follow. If you can, that routine on and off the charts is going to help you exercise discipline that when you do come to the charts, you can continue to exercise. So I really want you to understand the illusion of consistency in results is just that. It's a farce. It's not real. The idea of consistency has to be rooted in the things you can control, your routine. And to me, that means waking up and starting your day the same way every time. Now, this is going to be a thing that a lot of you might not like to hear, but in my opinion, you should not trade for the first 30 minutes that you wake up, within the first 30 minutes of you getting out of bed. I know way too many people that are placing trades from their phone. If that's you, you're saying yes in the chat. I know way too many people that are pulling the laptop out right away or getting to the desk right away before they even sip coffee. And that, to me, is asking for losses, because what you're doing there, you're letting your monkey brain drive your decision. There's no logic. There's no business plan. There's no nothing. You're waking up hungry to make money. And we're going to talk about that hunger to make money, because that is a big piece, a big root of a lot of these sins that we're talking about tonight. So the first sin, what I want you guys to understand, if you're trying to not do it, because that's what we're talking about here, is build yourself a solid routine. For me, that means waking up relatively at the same time every day, if not at the same time. Then first, I like to get out of bed, make my coffee, and go outside, or I sit here next to my trading desk and I meditate. I don't go on Instagram. I don't check in on the Discord chat. I don't even check the charts. That's not the right way to start my day. Instead, I like to start my day slow. I don't say good morning on Twitter, on Instagram, or in the chat until I've had my coffee and done 10 minutes of meditation. And I'll tell you, as much as someone here is going to be like, this is rah-rah meditation, I don't need any of that, I used to be the same way. I'm a very alpha, high-strung kind of guy, and I'm not the first one, at least I used to not be the first one to be into yoga and meditation and all that stuff. But meditation alone has made such a difference in my trading. If you're a fast thinker like me, if your brain just goes, and you don't slow down sometimes, meditation is the perfect antidote to that when it comes to trading, because it'll slow you down before you even get started. And again, that feeds the whole idea of not trading within the first few minutes of you waking up. Wake up. Don't go on Instagram. Who cares what other people are doing? Take 10 minutes for yourself. Let your brain wake up. Maybe even take 10 more minutes. Journal. What are you focused on? What are you feeling? Where's your mind today? You'll be really appreciative of that in the long run. And I think putting it with that pen to paper too can help us let go of some of that emotional baggage that some days we just wake up carrying. And then to the back end of the trading routine, after the trading day, I recommend everybody does chart markups. Chart markups, you're going to see some in today's presentation. Chart markups will make the difference. I was actually on a call today with our Black Shirt Club members. To me, chart markups are like going to the gym. Nobody wants to do it. No one wants to sit here and put a little text and draw the frame and measure out the win or the loss, and no one wants to do that. But that's what shortcuts experience. And as much as I want to tell you guys exactly when to get in and exactly when to get out, and as much as I want to tell you guys how to make money in this market, at the end of the day, it is solely on you. What can you do to get more experience under your belt? Chart markups. I use this example. If I'm Austin and I have Joe sitting next to me, and Austin is just trading live every day and not going back over the previous day or even that day to get chart markups and do some study, but Joe, the guy sitting next to me, Joe is going to grow at an exponentially faster rate than I would because I'm not getting that experience behind my eyes. That's all it is. It's simple. It's almost too simple, and that's why a lot of you guys don't do it. And I've had many people admit to me in our coaching calls, I don't do enough markups. I don't do enough markups. So start small. Build that piece into your routine on the front end here. Let's just start with 5 a day, 2 a day, and then get consistent with that. You have full control over your routine. And that's why I want you to focus on consistency in the things you have control over, in the things that you do before and after trading, and let the consistency and the results be dictated by the system that you're trading. Let the outcomes be what they may. You focus on what you can control, to let go of the previous day and start the day fresh. That's a big difference maker for me. So that's the first one. Deadly sin number 2. You knew this was coming, trading without a system. This is what I wish someone would have explained to me when I got started in trading. I didn't understand that you could have precise entry rules, precise exit rules. I didn't understand any of that. Like most traders, I didn't have those entry and exit rules. I didn't have a process to finding high probability trades. I didn't have any idea what backtesting was. There was no checklists involved in my trading. There was no trade management rules, and there was no position sizing plan. Write these down, screenshot these. If you do not have these detailed, if you can't give me verbal answers to each one of these bullets on this slide, you shouldn't really be trading live money. You should be either demo trading or in the process of learning from someone, whether it's ASFX or another mentor. You should be learning because these are the things that you need to be a trader. If you don't have these things, you're gambling. You can say what you want and argue with me about that. I know someone will. Someone will say, no, Austin, in gambling, I have no edge. I have no idea, blah, blah, blah. It is the same thing to gamble at blackjack, to gamble at roulette, where there is very little strategy at all, very little statistics in your favor. That is the same thing as just trading right off a support or resistance zone. Oh, it came to support, buy it. That isn't trading. You should have precise signals for entry, precise signals for exit. What we have at ASFX, the A1, the D1, and the D2, just 3 systems. I talked to a guy today who was thinking about joining the Black Shirt Club, and he said, you only have 3 systems that you trade. And I said, yeah. He's like, so how do you make money? And I said, because I only focus on what I know and I let the rest go to the birds. And I heard it on a podcast today that I was listening to. It's all about picking your spots. That's a really great way to understand trading. We're going to get into forcing trades in a second here, and I think that will come into play again. But picking your spots is the best way to describe what we need to do as traders. We don't just need to think it's at a level and sell it, think it's at a level and buy it. That isn't trading. That is very close. And if anything, guys, you're more than ever before in the past. We all know that, right? So if we're going against computer algorithms that are based on rules, based on checklists, they're based on these automatic formulas, how can we show up to the market with anything less than that? Right there, that's enough for you to go search out and find these, 6 bullets right here. You need to understand these 6 things or you're not trading a system. There's a lot of mentors, gurus out there that'll tell you how to trade off support and resistance or with a Fibonacci. None of that works for consistency, in my opinion. It can give you ideas, but it is not precise enough to build a business off of. You need to have these 6 bullet points, and they need to be very detailed. And that's what we teach in the course. We're going to get more into that in a second. So the first 2, just to go back really quick. Number 1, no routine. Lacking proper routine is a killer. Number 2, trading without a system, another big killer. So now number 3, over trading and forcing trades. And this is where we get into the nitty gritty. So for me, over trading and forcing trades is almost avoidable because when you're over trading, you're trading from a place of greed. When you're trading and forcing trades, you're normally just hopping back into trades after a loss. Again, what is that rooted in? Greed. So how can you kind of work around that? Well, number 1, you can build solid exit management rules into your trading plan like this. You have to also get used to the fact that there are no trade days. Look at this tweet that I put right here. If you're new in this business, get used to no trade days. This is something that no one wants to tell you at first. No one explained that to me, that there were going to be days that I had to show up to the desk and not take a trade. No one made that clear, and I really wish they would have. The piece beyond that that's important to understand is on those no trade days, you might have these three types of trades here at the bottom try to creep in and make you make mistakes. We've all taken them. The revenge trades where we jump back in after a loss with no reasoning. And sometimes we'll even put a bigger position size on. It's crazy. This is a really good rule to live by. If you're looking at your trade and it's not working for you, let's say you're buying it and it's going down, why would you add to a position? When we're having a logical conversation, we're sitting here drinking some scotch in my plastic cup, smoking a cigar, and I'm like, hey, why did you add to that position when it wasn't working for you? How could you ever justify that? So when you jump back into trades or you add to losing trades, those forcing of the trades, forcing of the clicking of the button is automatically going to put you in this bucket of this third deadly sin. So it's important to be aware that we can even end up taking board trades, test trades. I'm guilty of that for sure. I used to test things with real money all the time, and it just cost me money. It took me a year and a half when I first started trading to stop doing that. I would have 3 or 4 great trades in a week, and then 3 or 4 trades that I didn't even pay attention to because I justified them as test trades. And that's just being not held. That's not holding yourself accountable. So you're not going to grow. So these revenge trades, these board trades, these test trades, we can bite them in the ass, completely cut them out if we understand. Number 3, overtrading and forced trades are only going to lead us to losses. That's as simple as it needs to be. And you can work around it with having exit management rules like this. Part of having a system is having detailed rules like this. I wanted you guys to see this. So like you can see, I have rules not only for exit, but for which size setup, which quality setup I'm trading. When we do our ASFX systems every day, and if you're in our group chat, you know this, we'll say this is a B setup on EuroCAD. Well, with a B setup, my plan, this is from my trading plan, tells me I'm closing 50% of the trade when it moves to 1.5 or 2R. That's when my stop loss goes to break even. No matter what I think could happen, these are the rules that I default back onto. And by having good rules, back to number 2, having a good system, you can avoid these overtrading, forced trades, revenge trades, board trades. You can avoid that forcing of the button. And the last point I want to make on this slide is often we force trades because we need the money to trade. I just got off a call with someone who's looking to buy a house, and she was ready to put more money in her trading account to try to force money out of the market. She isn't trading as consistent as she will be in the future right now. So I told her that that was a bad idea. So we need to understand that if we put the money that we need to pay rent or that we need for the down payment on a house, if we put that in the market and try to double it, triple it, and make money on it because we need that money right now, most of us will make bad decisions. Most of us will end up losing more of that money instead of gaining on that money. So it's very important to understand that all of these forced trades and these over trades come from you probably not making enough money in other areas of your life. And what a lot of trading coaches will not tell you, but I will, is you should not quit your job and go all in on trading. In my opinion, that's really never the goal. If anything, you quit your job and start a business so you can still have another stream of income also alongside your trading. I don't think relying on trading, unless you're trading at a prop firm and you have a large amount of capital, I don't think that's ever a great idea. Every millionaire has 7, 8, 9, 10 streams of income. So why would you cut off one leg to just try to hop on the other? No, keep them both running as best you can to increase your income. And if you keep the cash flow coming in, you're going to just trade better. It's just the way that it is. Now, here's an example of a forced trade that could have happened to us this past week. This is EuroCAD. We were looking for shorts. Market sentiment on the TDI, it's not pictured here. Everything was great. We were really ready to short this thing. As it comes off the 50 EMA, this blue line in here, we're looking. Instead of jumping in short, we know that there's news coming, and that news is a high impact CAD news event that could shake up the whole market. So instead of forcing the shorts, we waited. And what happened when the news came in? Boom. It turned completely around and would have stopped you out. Literally, 20, 30 minutes later, it already starts to turn back down, coming back down towards where you wanted to short it back here, rubbing it in your face. This is what happens when you force trades. Every one of us will say yes if I ask this, so I'm not even going to ask. But I know everybody in this chat has taken a trade, gone short here, into news, gets stopped out, and then it falls back in the direction that they wanted it to move. Every single one of us has had that happen. How do we avoid it, Austin? How do we not let that happen? You don't force trades. In this situation, 30 minutes before a high impact news event on this pair, on CAD, when we're trading Euro CAD, you just don't take the trade. That's it. It's as simple as that. You're trying to sneak out some dollars before news comes in because you need the money, because you're greedy. You're not abundant. If you're in an abundance mindset perspective, you would never take that trade. I was not in this trade. James was not in this trade. Most of the members of ASFX, if not everybody, was not in this trade. So how do we avoid it? We supply ourselves with income through other streams. We live in a place of abundance mentally, and we don't operate from a place of greed. Oh, damn it, I lost it. I got to jump back in. How many of us would have gone short, got stopped out, bought it here at the top, and then get stopped out as it falls lower, only to want to punch your computer screen saying, how did I not just sell it again? Oh my God. But even there, I would argue with you and say, but even if you tried to sell it here, that's not an entry signal. You were going to get a signal here. Maybe it didn't play out. Maybe it did, and you just waited for the news candle, this big bar here. But even if you tried to sell it here, there's no ASFX signal here. If you're in ASFX, you know we would never look for a trade here. So then to be in short there, you're off edge. And one comment I'll make about that, when you make money off your edge, off your system, you're building a bad habit. You might think it's great that you're making money, but you're building bad habits of guessing, of feeling out the market. There's no room for feeling if we're trying to build a really successful and long-term business. So that's number 3, the overtrading and the forcing the trades. Number 4, it's not handling losses properly. And this is a big one. It really is. And I'm just as guilty of it as everybody else. There is a right way to handle a loss. The first thing is that if you don't have a community, if you don't have people to talk to and work with to give you feedback on your trades, you're just not going to grow at the pace that you're looking for. We all want to make the biggest strides forward in our individual growth as fast as we possibly can. We all want to make those steps. But if we are trying to hold ourselves accountable, like I told you, none of us can do it to the level that we actually need if we're trying to grow. So a community, for us, it's our ASFX Discord chat, having people that will give me feedback and they know what I'm looking at because they all took the course. That makes the biggest difference in your growth because you will overlook things. You will make small mistakes and you will need to nip them in the butt or they will come back to bite you in the long term in your trading career. Now, these are 2 controversial things I'm going to say here. Daily loss limits are a must. You got to know how to stop the bleeding. Too many people will keep trading, and blow off 10%, if not their whole account in a single day. Everybody's done that. We've all had high leverage brokers, unregulated brokers trying to flip a $10,000, $5,000, $100 account. We've all been there. But if we would have just kept daily loss limits in play, then we wouldn't have done that, at least in one day. So I'm a big believer in daily loss limits based on your overall account size. You could even have it, hey, if I lose 2 trades, I stop trading for the day. I'm not a big believer in that. I like it more off a percentage of your overall capital. Like I'm not going to lose 3%. If I lose 3% in a day, I stop. Something like that, depending on how aggressive you are, is a much smarter decision than just trading every day as much as you possibly can. Because selectivity is the answer here. As you guys can probably tell, it's not about taking every trade. If you have a system, the system is going to help you identify probabilities, and that's going to help you be in the highest probability trade every day. Some days there are no trade days, but when there are trades on, you want to make sure you're in the highest probability one. That doesn't mean it's going to be a winner. Even if it's an A high probability setup, a B setup, a great setup, that doesn't mean it's going to be a winner. So a daily loss limit just stops the bleeding if the market is not responding to your system in any day. Now, this is the more controversial one. The daily gain goals, in my opinion, are not needed. That sets a cap not only for what you could make in a day, but it also sets a target, an expectation. And if you read the book, The 4 Agreements by Don Miguel Ruiz, I recommend every trader reads that book. He talks about rule number 3, no expectations from anyone or from anything. That leads to letdown. And it's deeper than that. We're not going to go into why you shouldn't have expectations of things or people or the market. But what I'm saying with this daily gain goals aren't needed is if you set that expectation, you might end up forcing trades back to sin number 3, and that can lead you to actually more losses. And then you might not listen to me, and you might not have a daily loss limit in place, and you might go down 6, 7, 10% in a single day. And then you'll be like, didn't I watch that webinar with Austin, and he told me how to prevent this from happening? That's why I told you guys, take notes on this and keep it on your trading desk just for 2 weeks. And I guarantee you, you won't want to get rid of it. You will keep it there because it's going to make a difference. So with this, daily loss limits are a must. Stop the bleeding based on your overall account size, and then daily gains, gain goals, whatever you want to call it, not a thing to me. I don't trade like that at all. I just trade good trades when I'm at the desk, and I stick to my routine, showing up at the same time every day to trade the Forex market, and I just trade the best trades that present in that time. My back testing tells me that that's the best time to be there. That's why I show up then. And then I'm just letting the system play out its expectancy. That's the idea. And just to show you, this is a screenshot of our community. This is our Discord chat. This is the section chart markups where I send chart markups of our systems, the A1 entry. Like you can see, this is GN last night, A1 entry in the Asian session. So people can keep studying the markups and they can continue to grow. That's my job as the coach. But you can come into our live Forex trading ideas, our stocks and indices chat, our crypto chat, any of these chats, everybody else can communicate. In this one chat that I have the screenshot of, people in here cannot talk. They can only click the little emojis. I just post chart markups in here for study. But this is part of our community. You know, we've got 1,200 people in here. This is traders, professional traders from all over the world coming together to support each other. And some of these guys have been with me for fucking 4 years. It's wild. You know what I'm saying? Like, it's wild how long people have stayed with ASFX, and I don't even talk to them all the time. They just are active in the community, giving feedback and getting feedback from other traders. They don't need me. Like, I'm not the guru. You know what I'm saying? I'm not the best trader in the group by far. So the community keeps itself growing. And honestly, not to go too deep, but the logo, the ASFX triangle logo, the triangle with the line going horizontal through it, it's a symbol for transcendence. It's a symbol for a lot of things, but it's an Egyptian hieroglyph for transcendence. At least that's what they say. And then the 3 pillars underneath the line are another hieroglyphic symbol for group. So the idea behind the logo that we have, and this is why I built it that way, I had my buddy Eric design it, it means that as a group, we go further together. The group helps us transcend. Without the group, without a community, we can't go anywhere. And I'm telling you, that is why we created the logo the way it did. And it just ends up working out that that's what we've built. I think that's part of the intention here. And that's another thing that we do different. No one gets into this group chat unless they take the courses and speak our language. Just another thing that our group does different than every other group. Anybody else will just sell you $50 to get into the group chat. We don't do any of that. You've got to take the courses to get in so you speak the same language so you can help and contribute to a smart conversation. All right, number 5. Trading too large and oversized trades. Who's guilty of that? Every single person listening to my voice right now has overtraded, oversized a trade, or traded too large, however you'd like to say it. So now that we're all on the same page, that we've all made this mistake many times, let's focus on avoiding it. Number 1, if you're playing the long game, if you're really focused on building a long-term business and you don't need that money tomorrow to pay rent and you're not trying to flip an account, which I don't recommend, no trade should ever get more than 1.5% of your entire account balance. Doesn't matter what you think it can do. Doesn't matter how likely it is that Bitcoin takes off today and goes to 100 grand. It does not matter. 1.5% max. James, me, a lot of more conservative guys, we're putting 0.5%, 0.75% of our total account balance on every single trade. And it varies. The higher probability trades should get a slightly larger position, maybe 1%, versus a lower probability trade should get 0.5% risk. And again, oversizing, it's rooted in greed. It's rooted in lack of money. It's lack of abundance. Your job fired you. Now you're trying to flip a $2,000 account to pay rent. I'm not making fun of anybody that's done that because a lot of people have tried that, but that is a mistake. That person needs to go get a job, go get some other income coming in, and then be focused on learning about trading in the interim. Then when they're more capitalized, then they can move forward into trading more seriously and taking those types of trades. A big thing here with this is undercapitalization. As I say here, big money makes big money, small money makes small money. This is why funding companies right now are a really big topic, a hot topic for a lot of traders. Even if you've been trading your own money and you maybe started with 20 grand and you're up to 70 grand, you can take a funding challenge. I don't call them prop firms because they are not prop firms. You can take a funding challenge and you can trade 100 grand. You can have larger size. You can be properly capitalized and then split the profits with these companies. So if you're a new trader and you don't have 100 grand to go trade on your own, look into these funding companies because they're going to capitalize you properly so you don't trade like a moron. I'm not trying to be disingenuous to people. I'm just being funny when I say moron, but that's just what it is. If you go throwing 50 trades a day, 10 trades a day, you're undercapitalized. That's all it is. No one does 10 trades a day. Not in Forex, not the way we trade. You should be looking to pick your spots, like I said, hitting the precise entry signals, using the proper risk management, and repeating that process every day. James, one of the ASFX coaches, the guy who I'm running the Black Shirt Club with, he's up almost 90%. He's probably over 90% now since we filmed that video in just this year. All he does is bang his profits at 1R, 1.5R, lock his stop loss so he can't lose, and he lets the trade go. Sometimes he gets stopped in profit. Other times he gets to carry a runner. Why is he okay with taking profit at 1R and locking his stop? Two reasons. He understands the compounding of wins, so he doesn't want to lose. And number two, what I just say, he's properly capitalized. He's got 3 funded accounts and he's trading his own capital, all using a trade copier. And I only use him as an example instead of myself because I want you to see that anyone can do it. If he's doing it from South Africa, no disrespect to you, James, anybody can do it. James is a really great trader, but I think anyone can do it with the proper rules and the proper discipline. So without proper capital, you're more likely to make this mistake of oversizing or just taking too large of a position because you want money. You're looking at the P&L. So one thing you can do to kind of avoid this mistake, close your trading terminal on MetaTrader. Don't watch the money while you're trading. That's a big thing that's made a difference for a lot of people. Let's go into number 6. This is a big one. Adding to losing trades. I mentioned this a little bit before, but this is big. Doubling down, right? This is like a martingale strategy, right? This is not profitable. Go try it. You probably already have. That's why you're here. Go try it. It does not work. You cannot add to losing trades. I said this already. Don't add lighter fluid to a burning fire. Your trade is on fire. It is going against you. Why would you add to the position? Moreover, you'll either do that or you'll move your stop loss away from the trade. You sold it short. It starts coming up. You start moving your stop loss up. I've seen it so many times. When I look at people's MyFX book and I study their trades, I've seen them move their stop loss away and then they get stopped out at a higher price when they could have just taken the stop, gotten out, gone the other way and made the money back and some. But this is where the issue comes in. People don't want to be wrong. People don't want to lose trades because they think if they lose trades, they're an idiot. They're wrong. They suck at trading. But again, back to tip number 1, what I said, the outcomes of the trades are out of our control. We cannot control them. We can control the process. We can control the routine. We can find consistency there, but the outcomes completely out of our control. So you should be, instead of wanting to hold the trade and move the stop loss and get out of that and hold it into that, you should be wanting to get out of it and look for a better trade. Put your money to work somewhere else. But a lot of us we'd rather burn our hand on the flame and burn the skin off our hand, wiping out your whole account sometimes before you learn your lesson. It's probably happened to you. It's happened to me. I've done it many times, especially when I first started trading. But you have to be aware of it to avoid it going forward. Don't move your stop loss. If you're trading a system, the system is going to tell you where the stop loss should be. And if you're capitalized properly, if you have a large enough account, you're going to say, wait a minute, I'm down 600. Let me close this for a $600 loss. My next trade, if I hit 2 to 1, if I'm risking 10 and I hit 20, I'm going to make 1,800. On the day I'm going to wash at 1,200. That's a great day. You see what I'm saying? It's just this mindset. It's this decision of, I don't care if I'm wrong. I'm here to make money. I don't care if I trade. I'm here to make money. That goes to the no trade days. If you're here to trade, because that's what you think you should be doing, you're going to lose money. If you're here to stay focused on making money, write that at the top of your notes. I want to make money. I don't want to trade. I don't want to do anything else except make money. I don't care if I'm right or I'm wrong. I want to make money. That is the focus in trading. Making money has nothing to do with how many trades you take. Making money has nothing to do with how many trades you lose. It's how do you handle your losses and how do you handle your wins? That's the difference maker. And number 7, the final deadly sin for tonight's presentation is not mitigating risk. And this is, I can explain this in a couple of ways. First, you have to be grateful. You've got to be grateful that you are sitting here listening to me through something that we don't even see called the internet, this Wi-Fi that's floating around in the ether, in the air that you don't see, and you're able to make money by clicking buttons on your phone or on your computer. You've got to be grateful for that. You are living through one of the, if not the greatest time in human history. It's amazing what we can do from our desks. Blows my mind every day. So that's the first thing. Now, the second way, or the 2 ways, I should say, to mitigate risk on both sides of this trade. Number 1, moving your stop loss in the direction of the trade when it's moving in your favor. So this is separate from moving the stop loss when you're losing the trade. This is moving the stop loss when you're winning the trade. Now, a lot of traders will say, leave your stop, leave your take profit, go full take profit, go full stop loss. That's fine. They can keep saying that. Go try it if you'd like. I would challenge you to go do it. But when you're, let's say you're risking 10 and you want to make 70, when you're up 60 and it turns all the way down and you lose all the 60 that you were up just because you were going for 10 more pips, you'll start to second guess yourself on how you're managing your trades. I'll just leave it at that. So instead of letting it go up 60 and come back down to 0, we take profit along the way and we move the stop loss up. So when the market turns, We get stopped out in profit. We're still profitable on the trade. We move on to the next signal. Why? Because we're in an abundance mindset. We're trading a system. We know more entries are coming. We don't need to marry the trade. So moving the stop loss in the direction of your trade, if you're buying it, you move the stop loss up as it moves. And if you're selling it, you move the stop loss down as it moves. And in ASFX, in the video courses, I teach you where exactly to put the stop loss at entry. And then I teach you how to move it as the trade goes in your favor. Now, the other side of this is you should have exit rules that help you get out, even sometimes before you hit full stop. We call this regressive risk. For example, with the A1 formation, it can present as a shift candle, which is an 8 and 21 EMA cross, or it can present as an engulfing candle formation. On the engulfing candle formations, we use the TDI to validate which candle formations that is. But on those engulfing formations, if the next 15-minute bar, because we trade off the 15-minute time frame, if the next 15-minute bar does not go in the direction of the trade that we're trading, if we're buying the next 15-minute bar should stay bullish, if that does not happen, I automatically close half the trade. If it comes down and breaks the 8 EMA, I'm normally full out of the trade looking for another entry, and that's not at my stop loss, because normally my stop is at the entry candle open price, which is near the 21 EMA. So I'm able to get out of these things before I even hit full stop loss, which is even back to the previous sin. It's even more in line with that to get out and look for the better trade. Put the money to work in something that is not burning on fire, that is not telling you this is terrible. There's a quote from one of the guys I look up to on Twitter. He says, we can take paper cuts. We can't take gushers. I could take a paper cut. I'll take that small little stop out real quick, get out and find the next trade. But if you move the stop and it just keeps going against you, it turns into like getting your whole arm cut off rather than a paper cut. You know what I'm saying? And then here, the last thing. I said this many times. Closing your profits, realizing your gains, that is a form of mitigating risk. Taking profit at 1R, 2R, 3R, whatever it is, depending on your back testing, that's where back testing comes in to tell you how far your average trade should move. That's where you can figure out when you should start taking profit. But James starts taking profits right at 1R. Watch his trade recaps. At 1R, he's risking 10. He goes up 10. He's starting to take profit and mitigate his risk right away. Because he can't handle losses mentally like I can't. I hate losing. So I'd rather win smaller, more consistently, than go for the big swings, but take a couple of losses on the way. And I feel like a lot of you guys are probably similar to that. Now, this is my trade from yesterday, a big Bitcoin trade. I just wanted you guys to see how I mitigated risk. So I was in here 63,912, and I was also in 63,909 and 63,921. Very, very close. 63,912, 21, and 9 are all very close together. And you can see I pieced myself out of this trade. Look at the exit prices here. As it came higher, I was out at 66,000. So I'm buying it at 63, out at 66, out at 65.9, out at 66.8, out at 65.6. You can see I pieced myself out. Read this from 65.1, 65.6, 65.9, 66.8, 66.9. It's all in order because as this trade moved up, I started closing the profit. I didn't know what was going to happen. And if you look at Bitcoin today, it's come completely down and it's lower than where I bought it yesterday. So I have just more proof there of taking profit, not marrying the trade, and just letting it rip. Did I know that it was going to go 4.4% from my entry? No, I did not know that. So I didn't have to take profit in. I'm closing the trade, managing as it moves, and I'm raising the stop loss up, letting it hold that yellow line, that 8 EMA. Does that make sense to everybody? So now let's just recap the 7 sins. Number 1, lacking a consistent routine. Pre-market, post-market, it matters. That is where your consistency comes from. Number 2, trading without a predefined system. If you don't have those rules, the 6 bullet points that I listed, you should not be trading live money. It is as simple as that. I'm not even going to repeat it anymore. Go back to the slide. This recording is going to be sent to everybody. Screenshot it, rewatch it, whatever. If you don't have an answer to those 6 bullet points that I had, the entry, the backtesting, the exit, the trade management, the position sizing, if you don't have rules for that, stop trading real money, please. Like it's simple. It is that simple. Without that, you are gambling. Done. Number 3, overtrading and forcing trades. Again, that's rooted in greed. It can be rooted in undercapitalization. Just not having enough money to trade leads us to overtrade, leads us to jump back in and force a trade after a loss. But beyond that, it's the mindset. It's the abundance. It's like, okay, I took a loss. I don't need to keep trading today. Nothing else is setting up for me. I'll come back tomorrow. That mindset gets rewarded by the universe that is the Forex market, the day trading market. If you approach it with that, I don't need this today, there'll be more for me later, it comes for you later. It is bizarre how that works, but every day that I've always walked away from the desk, not trading at all, I end up saying to myself, maybe tomorrow we'll have a better trade. I end up having a better trade. It's crazy. So overtrading, forcing trades, definitely want to avoid that. Number four, just not handling losses properly, not being okay to lose. Like, we all take losses. If you think that some traders don't, they're lying to you. They're not showing you everything. Every trader takes losses. It really will be the determining factor on your success. How do you handle losses? Do you move your stop and do you move it out of the way and then take a bigger loss? Or do you have ways built into your trading plan, built into number two, to cut the losses even faster, mitigating the risk and keeping the losses small? Number five, trading too large, trading with large positions. This is rooted in greed and rooted in undercapitalization. Again, this is like the sister to over trading and forced trades. It's just over position sizing yourself into a trade normally that you have no business being in. Sometimes you'll still take a good signal and you'll just think, all right, look, I lost some money this week. I need to throw a double trade size on this next good signal. And you'll do that. In my opinion, every time you try to double down or go heavier like that after a loss, the market smacks you in the face and says, what the fuck do you think you're doing, bro? Come on. Number six, adding to losing trades. Again, it's like this simple. When you say it out loud, it's so simple. If a trade is not working, why would I add to it? If it is not working, the only reason, like if you're selling it and it starts coming higher and you start throwing more sell positions in, you're gambling, you're guessing, you're praying to God that it falls and puts you back in profit. And if you double down in, you could even actually make money on the trade. It's crazy, right? Imagine that. It won't happen. It might happen occasionally and it'll build the bad habit, like I mentioned before, but it won't happen for the most part. So when trades are not working, get out. Take the loss. You're not here to be a winner or a loser. You're here, you're judged if you can make money. That's it. How many you win, how many you lose, nobody gives a shit. The only difference maker between those that make money in this business and those that don't make money in this business is the winners know how to cut their losses and maximize their wins. The losers marry their losses and they get out of their wins too quickly. And then number seven kind of avoids that. You mitigate your risk. You move your stop loss when it's working for you. You get out quickly when the trade does not go in your direction. You have exit rules for that and you take profits. Realize your gains. That's it. Like, that's a huge thing that'll make a difference for you. So now that I've given this 7 sins layout, screenshot this, save these. These are the 7 things that if you're watching, if you've given me the 45 minutes so far, these are the 7 things that you really want to focus on not doing. If you just don't do these 7 things, you will move in the direction of consistently profitable results. 100% for sure. To what extent, I can never know. Everybody's got a different trading career in front of them. But if you just don't do these 7 things, I can guarantee you, you'll lose a lot less. And if you have a good system, you're going to start compounding your wins. And that's what everybody wants to do. Whether you're funded and you want to scale up, whether you want to get funded and then scale up, or if you're just trading your own money and you want to grow. These 7 things will stop you in your tracks wherever you are if you cannot be aware of them and avoid them. That simple. Questions?